Taking a quick look at some numbers that have come out, and you had Firstsource Solutions reporting its Q2 numbers. Consolidated PAT came in at 44.8 crores versus 41 crores, with a total consolidated income at 791 crores. Mr. Rajesh Subramaniam, the CEO and the MD at the company, is joining us on the phone line. So thanks very much for taking out the time. If you could give us the key highlights of this quarter, first off.
Yeah, highlights of the quarter, as you rightly mentioned, was a revenue of 791 crores, representing a 10% growth year on year, and an EBITDA profile of 90 crores, representing a 32% growth year on year. So overall, the margin expansion initiatives that we had earmarked are continuing, and we are seeing a very good sentiment in the customer markets that we operate in the US and in Europe, in the verticals that we operate in: healthcare, telecoms, media, and financial services. So in the quarter, we've won deals that will start reflecting in our performance from Q4 onwards. We will be on investment mode in the current quarter, and we definitely see the core offshoring business momentum gaining tailwinds. So it's been a very encouraging quarter that sets us up nicely for next year.
Okay. You pointed out towards and the European performance from the geography of Europe. Can you highlight for us what's the growth rate been out there? And with regards to client spending, are you seeing a pickup there overall?
From a client spending perspective, our business is not predicated on discretionary spends. Our businesses are predicated on the activities of our customers, which are routine, and they grow with the economic environment in the countries that we operate in. So from a growth perspective, Europe, the customers in Europe will grow at about 10 to 15% with us, both onshore and offshore combined. And the healthcare business in the US, on the payer side, we see growth rates in excess of 15%, given the reform mandate-driven changes which are going to play themselves out. On the provider side of business, growth is still muted given the fragmented nature of the business profile of the customers. But going forward, we definitely expect to see some momentum building up as the government shutdown in the US is behind us, and it's business as usual in relation to the Medicares and Medicaids that we deal with. So at an enterprise level, as I had mentioned, very positive about the verticals we are in, and the investments we have made in productizing our services, the initiatives in driving operating leverages aided by currency benefits will lead to a continuing margin expansion going forward.
All right. What has been the impact this time with regards to the currency move, and would that prompt any sort of a change in hedging policies? Would you be considering that, or you're comfortable on that front?
No, our hedging policy has always been a rolling 12 months, and in specific cases when the rupee sharply depreciated, we looked at extending between 12 and 24 months. So our hedging policy is to manage our business and not be speculative about where the exchange rate will. But I must say that the degrees of freedom in pricing leverages and our ability to accelerate our cash flow generation has become a lot more attractive given where the currency is, which continues into next year. And we don't expect to change our policy given some of the benefits that we see playing out. And as far as the impact in the quarter on the revenue side, currency contributed about almost 8 to 9% of our growth. So in constant currency terms, we were largely flat.
All right. Just one last question before I let you go, Mr. Subramaniam. How easy or difficult is going to be margin maintenance for you?
Margin maintenance, actually we are looking at margin expansion from the current levels. Our expectation of EBITDA is close to around between 12 and 12.5% for this year. Currently we are at about 11.3%. And going forward, we believe we have headroom in terms of how we drive more efficiencies, and we definitely see the benefits of the investments we've made in our service offering suite, which will start paying for in terms of incremental revenues that drop to the margins at a higher percentage than what the enterprise margins today are. So I definitely do see margin expansion continuing well into FY15.
Mr. Subramaniam, thank you very much, sir, for joining in and sharing how the Q2 performance at Firstsource has been with us. That's the management at Firstsource Solutions, and the stock's up about 0.5%. Let's take a very short break right here.